Thank you, Rick. Let's get back to Robert Luna from Shorevest. Rob, earnings seemed to dodge the bullet, didn't they, in Q2? Will they be so lucky in Q3? And what could the scope of the potential downgrades look like, considering what's happening with FX and the dollar especially? And where then do PE multiples bottom out?
Yeah, well, I mean, that's actually something that we were just looking at in terms of trying to gauge what's going to be going on, looking at some preliminary reports. I think, everything right now in terms of the consumer, I think, has been very, very resilient. In the U.S., obviously, we're still a consumer-driven economy, so that part of the economy, that part of earnings in the S&P is going to be extremely important. Now, the dollar has been very strong, and that's going to be a headwind. And as we know, a lot of U.S. companies are relying on global strength to be able to support what's going on here domestically. So we might start to see that play in some of these larger companies, but that is one of the reasons that we're talking to our clients about potentially steering towards some of the mid and small cap companies who aren't necessarily as reliant on that. And here, we do believe inflation has peaked. We think in places like Europe, where they're much more reliant on Russian oil, is going to be a little bit more of a challenge. So we're staying domestic, we're staying smaller cap, and we think those smaller companies are going to be able to navigate that a little bit better. That
said, Rob, there's so much exposure in terms of the revenue from international on the S&P 500 companies. So considering the spillover from Europe that you just alluded to, considering that China is still looking very vulnerable in terms of economic activity and zero COVID, then what's going to be the upshot then on earnings season? And you throw in the stronger dollar as well. It's going to be pretty rough. Is Q3 earnings and the downgrades and the outlook on the guidance, is that going to be the catalyst to some pretty major capitulation in the markets?
It's possible. And I think, our base case scenario is that we do hold 3,900. That being said, we're a percentage or point or above there. So I think if that is the catalyst, we definitely could go back and touch that 3680 level. I was just looking at a report by McDonald's, and they're saying it is very challenging trying to navigate a zero COVID policy in China. And if you look at McDonald's, in the U.S., they've pretty much grown as much as they can. So those bigger multinational companies, as you mentioned, that are a large part of the S&P 500, we'd probably be a little bit underweight there, with the exception of technology, just for the simple reason of some of those names still down 45 or 50%. We think very stock specific, sector specific. You have to be a little bit careful, more careful going into the third quarter, where you start to see some of these issues play out.
Perfect segue, Rob. If we need then to approach tech on a selective basis, then do we use this pullback to build positions in large cap tech, Apple, Alphabet, Amazon, and how then do we approach some of the more cyclical corners of the tech market? And I'm thinking of the semis. Do we avoid?
Yeah. So, look, I think when you look at the big names, some of that you have mentioned, in particular, Meta, Google, these are names that are trading at the largest discount we've seen in a very long time. A name like Meta, obviously has some challenges ahead of it, but it's trading at 14 times earnings. So a significant discount, not only alone to the technology sector, but to the S&P 500. And, I've just seen this story too many times play out. The death of Amazon, the death of Meta, I remember the death of Microsoft. These are companies that are fundamental engines to the growth of the U.S. economy. They're not going anywhere anytime soon. And as an investor, it always is paid off to buy these when you're hearing about the death of these names. So I think if you're looking for one area and you have 24 months that you can invest, which long-term investors hopefully do, those are probably the best names to put your money into right now. When you look at some of the other sectors that everyone's gone into, consumer staples, utilities, those companies are trading at the highest level we've seen in quite a long time. And when growth slows down, which we believe it will, people are going to rotate back into these names that are still growing top line at over 20%.
Rob, just a quick line on the semis. Do we avoid that sector given their cyclical exposure? And when you look at the China internet names, it's a similar story to the FANGs. isn't it? We've seen such a severe pullback on a year-to-date basis. Are they representing value at this juncture?
Yeah, so I think in the semis, the name that we like there, I own personally, is NVIDIA. I think that's a way that you can play the semis if you could stomach a little bit of pain. But look, I've been doing this over 20 years. You very rarely make money in the names that are comfortable, that everybody's all in, because there's no incremental buyers there left. And so I think it's about taking risk, but calculated risk. And I think technology is definitely the place where you have to start putting some money. We like NVIDIA. We like the names that I talked about. And if you really want to go out there on a limb, you can start looking at these smaller names, companies we like Upwork, which is the gig economy where people are shifting to, and also names like Roblox. We do believe the metaverse will come to play. If you look at the partnerships that they're starting to grab and the way that that stock has been very resilient, even on down days, Roblox, we think, is a name that for very long-term investors who want to take some more risk should add into their portfolio after the pullback.
Yeah, speaking of Roblox, I've been mocked mercilessly on Roblox for being a noob when I was trying to play it and engage my 9-year-old son on the platform. But there you go, generation gap, isn't it? Rob, thank you very much indeed for that. You will be staying with us for a little bit longer, and we'll get back to you and pursue the conversation with you